Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Hi, this week we have two webinars on 20th July Saturday that are of your interest. First is exploring the global luxury consumption landscapes at 10 am in the morning, and second is securing the golden years, a comprehensive health insurance for senior citizens. So don't miss out this opportunity. Please register. Thank you.
In today's video, we're going to talk about a forgotten element when it comes to good investing. Let's first start by assessing what the sentiment in the market is around us. If we look at how market participants are behaving today, or the kind of conversations that are happening between investors, we'll realize that there is a lot of confidence in the market. You're seeing this in the way indices are moving. You're seeing this in the way FIIs have turned buyers in July, pumping in nearly 15,000 crores this month, as opposed to maybe a month ago when they were sellers. You're also seeing this in terms of new fund offerings that are coming in, and many of the NFO launches have been in the thematic category, particularly in themes where performance has already been quite good. So there is a certain confidence that investors have that they're taking forward, where they do believe that what they've achieved in the past can continue for some more time. This doesn't matter what kind of investor they are, whether they're a mutual fund investor, whether they're an equity investor, whether they're long-term or even traders. Everyone seems to believe that the past trends can carry forward because of the level of confidence that they have, right? So what is this forgotten element of good investing? We would like to call it doubt. Because what is happening is investors are maintaining a certain set of assumptions. Because these assumptions have worked in the last 3 years or 5 years, they are expecting that in the next 3 and 5 years, the same assumptions will hold true. So there is no doubt, there is no process of coming back and seeing whether these assumptions will actually run the same way or if they will be different going forward. There's an interesting quote from the French philosopher Voltaire, where he says that doubt is an unpleasant condition, but certainty is absurd. And this is something that all market participants need to reflect on today. We need to try to create some space for doubt in all the investments that we've planned. Whether you're bullish or bearish, you do need to think about doubt, and you need to create some space to question your own assumptions. In behavioral finance, you have this very interesting concept known as a pre-mortem, where you deliberately create room for doubt. You ask what could happen. You try to see what are the effects of each of those questions that you ask, right? This prepares you for good outcomes and bad outcomes, which is very important in the market. Now, I would like to talk about 4 ways in which doubt can help us in becoming better investors in the current market context. This is a conversation that you can have with your advisor. This is something that you can do on your own if you're an independent investor. The first is doubt helps us moderate our expectations, right? And when we moderate our expectations, we are much more likely to reach our goals because we are not only depending on the investments to do the heavy lifting. We are also expecting ourselves to put in more effort to reach those targets. The second most important thing is that doubt keeps us alert, because otherwise we can become complacent. When we become complacent, we miss out on opportunities. We may also not get out of things at the right time. The third advantage of maintaining a little bit of skepticism or being doubtful of what we're doing is to come back to the drawing board and review our portfolios and see whether we can make them stronger in some way or the other. Being stronger can mean sitting in cash, it can mean taking some profits, it can mean moving from one asset class to another, which brings us to the fourth point. When we are doubtful, we actually do some level of rebalancing in our portfolios, and that is very essential to long-term wealth creation. Only when we rebalance and we review regularly are we going to compound in a more steady and palatable manner. When we don't do rebalancing, you can see large drawdowns, or you can even see high volatility. May not be pleasant for an investor to experience. We believe that this element of investing, which is to have a little bit of skepticism, to be doubtful of what can happen, to lower our confidence because there's so much uncertainty in the world, has really been forgotten in investing over the last few years. We think it's time to bring doubt back into fashion. If you like this video, let us know in the comments below.